We're super excited to be here live with you today on this Thursday. Again, a lot happening in the markets out there. Helaine, really, really happy to be here with you to break it all down.
Yeah, excited to be here today on Thursday. Yeah.
Yeah, absolutely. So we got some new macro data today. We got, of course, the weekly initial jobless claims report. We also got a revised GDP report for Q2. Saw that GDP number. This was the third and final revision. We got that revised higher, which was great. It was a pretty notable upward revision. That's obviously a nice feather in the cap for the economic watchers out there. Seeing GDP grow a little bit hotter than what was initially forecast. Saw initial jobless claims come in a little under the forecast. So I think net net, that's probably coming out to be good news for the market. A couple different angles there, but overall, some good kind of macro news today. So being a little bit supportive for stocks. Certainly after the last couple of days. But Helaine, I think probably should go ahead and hop in and start breaking down today's price action because it actually looks like stocks are moving a bit right now even since we had just logged on and started the call. So let's go ahead,
Sounds good.
kick things
Sounds
off,
good.
get these charts up here. And of course, right here, this is the chart of the S&P 500 index. We always like to start off our calls, just breaking this down, seeing what we're talking about, seeing, pointing out what we're seeing in the markets. And then we're going to hop into some trade ideas later. But first, just hopping into this. We all know, the past several days, we've been pulling back. The markets have been they were certainly due for it. The markets had, rallied pretty substantially following the Fed rate cut last week. They got squarely in overbought territory. That's confirmed by seeing the daily price chart here with the S&P trading well above the upper Keltner channel for almost 2 weeks consecutively, and then also several really, really hot readings on our excuse me short-term RSI chart down here. Seeing actually just earlier this week on Monday when we set the most recent new all-time closing high, that reading was coming in at just a scorching hot almost 90 on the 5-day RSI. You very, very rarely get a reading like that. And then you can see, again, in several occasions in the past, when we have gotten those, we typically get a pretty quick snapback and retracement following that. So that's exactly what we're seeing right now. That you just kind of saw that rubber band of the market kind of stretched out a little too wide. This is a totally normal pullback. It's very much to be expected within a bull market. with the context and backdrop of a very strong cyclical bull market that we're in right now. So like we're get this bit of a pullback here the last couple of days. Typical part of a bull market, still in that 2 steps forward, 1 step back type of trading.
Hmm.
But where are you seeing, where this pullback may actually, start to, kind of, maybe find some support and start to rally and, seeing that the profit taking rotation may be done.
Sure. Well, I mean, if we were to be in line with like the trend we've seen so far over the last couple of months, we've seen resistance at that middle Keltner channel. And so that's
Mhm.
actually where we touched down today. If you zoom in, you can see that we saw that pull back to the middle of the Keltner channels and we saw a hard bounce off of there. Not only that, but that candle, if it closes out today where it's at right now, that is a hammer. And that will indicate a short-term trend reversal. So what we've seen is that pullback off those highs, and that would indicate very often that we're going to see trading higher from here. It doesn't always assure that it's going to happen, but typically it is indicative of a short-term trend reversal.
Exactly right. Yeah, that's one of our favorite candles to watch for. Of course, nothing's 100%. We all know that, but this is a very high probability, reversal candle or bar, whichever type of chart you're looking at. Seeing what's showing up in this chart right here, you can see it rallied, or excuse me, sold off down in that middle channel. It has rallied substantially off of those lows. And again, you'd have to see it close kind of where, exactly the market's at right now. But if we do get a close, here, right around the range we're trading right now, probably just above 6,600, we would get that bullish candle or bullish hammer candle on the chart. Really, really encouraging stuff right there. So yeah, again, Helene, I totally agree with you. I think the middle counter channel, it's obviously served on several occasions recently. You can see the pullbacks all throughout August. Even going back to June, May, the middle counter channel in this bull market has been a really, really reliable level of support for this market. It's on numerous occasions pulled back to it, rallied off of it. If by chance we do have a little little bit further of a breakdown, in the markets tomorrow or, several trading days to come, we certainly do have another floor of support just below there. We had this ceiling of resistance on the market for much of the, month of August. We were, really struggling to break meaningfully above, call it 65.25 or 65.50. The market rallied up, kind of bounced its head off of that level. It was a really solid level of resistance there. But finally, of course, leading into the Fed meeting where they cut rates, we finally started to see some acceleration in the first couple weeks of September right there. We finally broke through it. But again, as technical analysts here, we know that prior levels of resistance, once you break through them, they flip to now current levels of support. So, we do have another just a few S&P points down too. If it were to break through the middle channel, we have that other level of support roughly right here. Call it 65.50, 65.25, kind of in that range. I fully expect that you would see a lot of support coming into the markets right there as well. So certainly some really key levels to be watching there. From all we can see right now, Helaine, looking at today's trading, that middle Keltner channel certainly has enticed, a good number of buyers to come, right back into stocks today in
Hmm.
today's trading. So we'll see how things close out. But, regarding how, this week shapes out and ends, probably tomorrow is probably going to be the day that really defines it. Because, of course,
Yeah.
we've been talking about it all week. Have a major inflation reading coming out. It's the Fed's preferred gauge of inflation. Obviously, inflation and the labor market are still at odds right now, so Fed's kind of in a tough spot. So the market's certainly hoping for a cool inflation reading from tomorrow's PCE report, but we'll be getting that just before the market opens tomorrow. It's a huge report. Like I said, it's probably going to drive prices for the next several trading sessions. So something to be watching for, but encouraged by today's trading, even though we're down in a down tape.
Agreed. And Blaine, before we jump into our trades, I know we're just about ready to do that. Leo had a quick question. He's asking, what is a candle?
Oh, great question. Yeah. So fantastic. Thanks for asking the question. So a candle, you said it was Leo that asked the question, Helene?
Yes.
Okay. So Leo, a candle when referring to that. So right now, when we're looking at this chart, you see each one of these vertical lines here. These are just bars. So this is a open, high, low, close bar. So that's what you refer to these vertical lines as. But each one of these, we're looking at a daily price chart here. Each one of these vertical lines is just representing each individual day's trading action. So like, the range. So for instance, this red one right here that's kind of highlighted in yellow, that
Why
is
don't you zoom in,
today's.
Blaine? It'd be a lot easier to see. I'm sorry.
Yeah, good point. Let me go ahead and zoom the chart in a little bit. So
Okay.
this one right here. So this, it kind of looks like a upright cross right here, essentially. But that's today's bar. So if you're looking at today's bar, the top end of this would be the high end of today's trading range. The very low end of this would be the low end of today's trading range. And for a bar, again, this first line right here would be where we opened, and then this horizontal line on the right would be where the current price is. And once you get to the closing part of the day, this is where the close price would be. So you can see it's roughly in parity, right, with where the market opened today. You see it, it opened here, rallied. It may have actually rallied and sold off, and then it's come all the way back to roughly to where it opened. So that's a bar. Now a candle is just a different type of chart. So again, to be looking at the same thing. Again, remember each one of these vertical lines here is representing a single day's trading. I'll just show you an example right here. So candlestick chart, candle chart. This is what a candle looks like. So it's very similar, slightly different representation. I prefer to look at the open, high, low, close bars. I think it's just a little more
Just
intuitive.
personal preference, I think.
Yeah, it's just personal preference. There's obviously a lot of preferences out there, a lot of customization you can do in these charts, but it's just
Yeah,
another way to represent a given day's trading on a chart. So this is what
definitely.
a candle chart looks like. So this would be today. This was Wednesday, Tuesday, Monday.
Yep.
So that's what a candle is. So great question. Appreciate you asking.
Yeah, thanks for the question, Leo. I appreciate it.
Yep, absolutely. So as we were saying though, tomorrow, major inflation reading there. It's going to be, it's a really key pivotal report. The Fed watches very closely. It really factors heavily into their decision. So, given that inflation still remaining pretty sticky, above the Fed's target rate, that's going to be probably moving stock prices, whether up or down tomorrow, pending the result of that. So make sure to keep your eye on that report. Really, really important one there. Now, Helaine, anything else you want to add before we go ahead and hop into our trade ideas for today?
Nope, let's jump into the trades.
All right, let's do it. So the trade idea I had for today, as we know, and Helaine, just like we mentioned, several weeks back, post Fed rate cut, and we were talking about our playbook for the rest of the year. We talked about, through the end of the year, the next quarter, next 6 months, next year, we felt, several areas of the market were probably very well positioned to continue to outperform, and really drive a lot of the performance we're probably likely to see in the market over that period of time. So we pointed out technology just as a whole, with a bias likely towards the big cap tech. So that was one area we talked about. Big cap tech. We talked about small caps and interest rate sensitive areas. So you're talking about the home builders, discretionary pockets of the market, things like that. And then finally, we also settled on the financials too. So that was kind of the playbook we laid out several weeks ago. And I still think financials are still very well positioned to continue to benefit. There's a lot of tailwinds behind these right now. Equity markets, again, they're pretty much across the board here in the U.S., very close to all-time highs. I know we've pulled back in the last several days, but again, the overall performance this year has been really, really strong. There's just, the capital markets are coming alive. IPO markets have been heating up. There's so many things. I don't want to go down the rabbit hole, but there's a lot of very strong tailwinds behind the financials broadly right now. And that's why you're seeing a lot of strong price action and performance in the financial stocks. And there's no difference right here. This is Bank of New York Mellon. Ticker is BK. And so, not Burger King. We're not having it your way here. This is BK, Bank of New York Mellon. Great looking stock chart here. As you can see, it's been trending up, just incredibly powerful trend over the past year. Going from the lower left to the upper right. Really love to see that right off the bat. We have our 21-day EMA right here. It's our red line trading above our green line right here, which is our 63-day EMA. So those are the two technical trend lines we're looking at right here. And again, you can see where our crossover occurred back here in early May as the stock was coming out of those April lows. So it's been on just a rocket ship trend higher ever since then. It's been hitting just on numerous occasions new all-time highs. You can see all these shown here. So great series of higher highs and higher lows. New all-time highs. Even just recently, this week, it's hit several new all-time highs, which is really encouraging. But at current price levels, you can see that it is not trading outside of our upper Keltner channel band. You can see it's just a touch below 109 a share, so it's well within that upper Keltner channel band, despite being very near its all-time high. So it's continuing that nice bullish trend higher. Again, the timing is confirmed down here by our RSI, our short-term RSI. It's not currently overbought according to this either. And again, you can see that RSI line starting to reaccelerate to the upside. So really encouraging things we're seeing there. And then one final thing too, just building the case for this trade that I really like for today. This is a ratio chart. So this is taking the price action of BK stock and dividing it by the S&P 500. So, certainly anytime we're looking for a new trade, we certainly like to find things that are outperforming, that are having the best performance, but particularly in these types of market environments, where, maybe the market's a little bit more contractionary, maybe it's more of a risk off day or week, kind of like what we're getting right now. And so, the index level, things that more trade kind of tied more to the index level, those stocks might not be performing quite as great this week. So we really want to lean into ones that are showing that strong outperformance. And that's exactly what this ratio chart shows right here. All we're looking at is just the slope of this line in a ratio chart. So, when you're looking at one of these, whenever the line is sloping up like it has been for pretty much this entire chart over the past year, but even of late, you can see over the past several weeks, it's been sloping up even higher, making highs. What that is indicating is that our numerator, in this case, the stock we're looking at, BK, Bank of New York Mellon, is outperforming our denominator, which is the S&P 500. So it means the stock that we're considering here, BK, is actually outperforming the index. So even though the index has been breaking out to new all-time highs, had some really strong trading lately, this stock's been even doing that much better because you're seeing this line slope up. So a really, really strong trend here in BK. And so because of that, Typically with the financials, not a lot of time value in these options. Often kind of hard to find, say, a call option debit spread if you were trying to take, a setup for one of those. Not to say you can't find one, but typically a little more difficult, as we know, Helaine.
Oh
So I'm
yeah.
actually targeting this one with a directional call option purchase. So I landed on the October 17th option expiration right here. And specifically this call right here, it's a little bit in the money. It's about $8.60 in the money. So it's the 100 strike call right here. It's currently coming in about $10.05 right there. So that is the trade I would look to go ahead and target for today. Now I already have a decent bit of financial exposure in my portfolio, some current trades I have on. So actually not going to go ahead and place this one, but really, really like this trade setup. If I didn't already have some other financial trades on, that I probably would go ahead and place this one. But just for diversification's sake, probably not going to lock that one in. But that was the trade that I spotted for today that I wanted to share here in the call.
Awesome. I love the trade, Blaine. Yeah, it looks like a great pick. Awesome trend. And it's funny enough that we go into these calls and Blaine and I don't talk about the trade that we're bringing to the table. Typically, once we get on these calls, we say, "This is what I'm gonna, this is my trade. This is your trade." And today we came to this call and we ended up both picking financials and banks. Funny enough, because they're clearly just outperforming the market. And so let me go ahead and jump into my trade. And this is one that I actually found using our Copilot indicator. So we have this indicator and scanner on Thinkorswim that our team has developed. Every day you can go on and you can scan to find the buy signals on that given day. Today I decided to run the scan, see what was on a buy signal, knowing that we had this call, and Bank of America came up, and I saw the chart and I said, that's a no-brainer to me. So that is my pick today. Here is the chart for BAC, Bank of America. As you can see, I have a shorter term trend line, the 35-day EMA, and a longer term trend line, the 200-day moving average. And I want to see the stock trading above both of those moving averages. But additionally, I want to see the shorter term trend trading above that longer term trend. And that's exactly what we're seeing right here to confirm the buy signal for BAC. As you can see, here's the stock price. Here's that 35-day EMA, the green line, and here's that 200-day moving average. So that buy signal really initiated at the beginning of June when the 35-day EMA crossed above the 200-day moving average. Since then, it stayed well, the 35-day has stayed well above the 200-day moving average. And since the beginning of August, we've really seen BAC start to accelerate in this bullish trend. So we have that confirmed buy signal. And now timing that entry, of course, we use the Keltner channels and RSI in order to time our entries. And looking at BAC, although it is traded along that upper Keltner channel, which is something that really bullish stocks do, it's currently within that the buy zone, which is anywhere below the upper Keltner channel. So it went from being pretty overheated and shooting above the upper channel to pulling back a little bit, and now we can see that it's starting to bounce again. And you can see that in today's price action. Let me just zoom in a little bit more. It might be a little bit helpful to see that price action today. So, okay, here we saw that pop above the upper Keltner channel, that pull back down as people started taking some money off the table, started taking some profits. And then today we're seeing that push higher and what appears to be a reacceleration and a resumption of that previous bull trend. Additionally, RSI wise, although not currently overheated, it is a little hot, but it's not overheated, and it appears to have pulled back and is starting to trade higher once again. So that's confirming that this is a good time to enter into BAC. Now, as Blaine had mentioned, financials tend to be really difficult to find call option debit spreads for, and that is because of the low time value in the options. Call option debit spreads need time value in order to make money. So if an option doesn't have much time value, it's not going to work for a call option debit spread. And instead, we're going to look for a directional call option purchase for that trade. So that's exactly how I'm going today with Bank of America. I'm looking at the October 24th, which is about a month out. I'm looking at the 48 strike call. Now, not a ton of time value here. The stock has to move 1.13% between now and option expiration in order for me to profit on the option if I were to hold it all the way until the expiration. So really reduced time value there and nice low entry cost too. I love that as well. So
Yeah.
I'm gonna go ahead and I'm gonna purchase one contract. Looks like the midpoint is 450. I'm gonna review. I'm using, of course, a limit order, and I'm gonna submit that, and hopefully I will get it filled here in a minute.
I'm sure you'll probably be able to get that one filled. Those options typically are pretty liquid in Bank of America. So, whether you have to bump it up a few cents or whatever, I'm sure you can probably get that one filled. That's another great looking trade there, Helene. I think it's funny you and I
Thanks.
both ended up landing on financials today. But, as we said, about a week ago when we were talking about kind of our playbook for the rest of the year and, kind of short-term outlook, financials are clearly one of the spots kind of towards the top of that list of where we're expecting to see some of that outperformance. But
Yeah.
a little nervous we both landed on financials. It kind of feels like some of the sports pregame shows where, all the pundits pick the same team. It's kind of like the curse. So
I
uh,
know. I
hopefully
know.
not that type of situation. But no, in all seriousness, I think that both of those trades, look really strong. Of course, the technicals are confirming, a lot of bullish activity and look like great trades. So great spot there with BAC.
Thanks, I appreciate it. And I also just wanted to note that last Thursday I had picked Lowe's as my trade, and on Tuesday I said, "Hey guys, I have a 25% return. I'm going to look to exit this trade." I placed a limit order for a 25% return. It didn't hit it on Tuesday when I told you guys I was going to close out. So Wednesday, market opens. I go onto my brokerage account. I have a 40, I think it was a 47% return on the trade. Just went ahead and closed that out, took the profit, but just want to let you guys know that did turn into a nice one.
Awesome, awesome. That's fantastic. Um, Now, I see we have a question here in the chat from Greg. He's asking about two recent trades that we featured on here. I believe there are two picks I had. And Greg, that's the XHB and Amazon. Those two, unfortunately, they did turn against us again. Those are some that I think that, longer term do have, really high odds of continuing to perform quite strongly. Timing wasn't the best on those. We had some things that kind of, happened and became headwinds for both of those, shortly after we entered that, we didn't quite see happening. So did get stopped out of both of those just to answer your question. Let's see. I think we have a couple other questions here too. Um,
So I
and
said, can I put my pick into the chat? Yes, I just did. Mine was BAC
Perfect.
October 24th, 48 strike call. And I
There you
did just
go.
get in. I had to go 5 cents higher. So got in around 455.
Awesome. Glad you got that one filled. And Jim also asked another question. Um, Let's see right here. Jim was saying, do you usually place your trades at this time of day, or could you wait until near the end of the day at the or at the market open? Does it matter? Does it make a difference? And so, Jim, to answer that one, generally with most of our trading, we can just take it, during any time of the day. We do have several strategies here at the optioneering team that are a little more time specific, like some of our butterfly spread strategies, some things like that
Mhm.
that we do typically like to, enter actually closer to the end of the trading day. But for the majority of those, like the trades we were talking about just here, for BK, BAC, these are ones that we would take, probably just any time during the day, as long as the technicals were confirming, that was a, good entry, technicals confirming it was a good timing on the setup. Those types of setups, we would look to take those anytime during the day.
Yeah, so for directional call and put option purchases and for call and put option debit spreads, those are less time specific. I mean, when we send out recommendations, we always say like, if you don't get in today, that's okay. You could get in tomorrow even, and you could get a better or worse price than us, but it still typically would be good to enter because we're not day trading here. These aren't day trades. These are swing
Right.
trades. So we're looking for a trend. We're trying to capture profit off of that trend. And it is not going to be enter right at 10 a.m. and exit at 1 p.m. No, these are multi-day, sometimes week-long plus trades.
Exactly. Yeah, great point, Helaine. And I see Greg asked to follow up too. He's asking about the stop out on some of those trades. Is it at a 20% stop, 30, whatever? And so great question there, Greg. So when I'm typically trading a directional option, I often will use around a 30% stop, 30, 35% is what I typically use. I know Chuck's is a little bit tighter when he typically uses one. He typically will go with a 25 to 30%. I'm happy, if, as long as the charts, I'm not seeing a complete breakdown in the trend on the chart. I'll obviously be watching some of those trades. If they start to move against me, I'll be watching the charts super close, checking them every day, multiple times a day, just seeing how they're doing. But if I see one that the trend hasn't completely broken down, but I, have a 30% loss on paper, I'll try to give that trade as much room as possible to recover. But, if it gets really past that 30, 35%, generally at that point in time, I'll look to go ahead and just close that one out, can it, and look for some other opportunities.
Awesome.
Awesome. Yep. No problem, Greg and Jim. Appreciate your questions and glad we could help out. So, Helaine, is there anything else you wanted to cover before we go ahead and wrap things up for today?
No, I think that was it. But guys, I just want to thank you all so much for your awesome questions. We love getting to engage with you guys, answer your questions, talk about trades and strategies and all of that. So we really, really love the questions. So we really appreciate it. We appreciate you guys being here and joining us as we talk about what we're trading, what we're seeing, and our strategy moving forward.
Absolutely, absolutely. Yeah, no, we really appreciate it, and second everything you said there, Helene. We're very thankful for all you attending. Being our frequent attendees. Being here, our OGs from the first TOD live call. So thanks so much for being here live with us. We always really appreciate you being here, taking some time to join us here live in the room. But we will be back on Tuesday. That's going to be the next TOD live call. So we'll be back here live in the room with you on Tuesday. Really would love to see all of you back here in attendance with us. We'll be, breaking down all the aftermath of tomorrow's inflation report. Of course, heading into the weekend, so give us some time to digest it and think about it. What it might mean for markets, and we'll be ramped up and ready to go following the couple days in between now and then. So until then, hope you all have a fantastic rest of your week. Happy trading. Hope you have a great weekend, and we'll plan on seeing you back here Tuesday.
Yep, we'll see you then, guys.
Awesome. Take care, everybody. Thanks so much.